Good afternoon, everybody, and welcome to this edition of our live market analysis, ASX focused. My name is Carl Kapelunga. I'm the market analyst over here at Think Markets Australia, and it's a pleasure to be with you on a really exciting day on the ASX. We've got a couple of big takeovers in play, which I'm no doubt we'll get to. Before we conclude, the agenda for today is pretty simple. Over to you. It's Ask Me Anything Q&A on your favourite ASX stocks, and I'll give you my best technical and fundamental analysis reader. Let's kick off with a few requests that have already been rolling in. I should mention Khan from Think Markets is online on the chat window. If you have any technical issues or requests, you can send them through to him, as well as any comments or questions on the Think Markets product offering. Welcome so many people here today. Wonderful to see. William said hi. He's got Brambles first up. Actually, before I do that, William, I might do as promised on Twitter today, which is the big lithium sector review. So the big news today, Albemarle, which is one of the biggest, if not the biggest, to be fair, lithium producers in the world, has lobbed in a bid for our own Liontown Resources. There's the chart there. The price is $2.50 a share, and just over $3 billion, if I'm not mistaken, the value. And we can see that we have had some scratchings on Liontown. In fact, on March the 7th, in this exact format, we said that the rest of the sector looked pretty rubbish, and this was the only one we felt was worth adding any risk to. And we said at 1/3 at the time, and if it did the right candles, another 1/3. I'll leave that up to you whether that occurred. You can see prior to that, various scratching on the screen indicating that we were, exiting. So great example of how, good technical analysis will give you a clearly defined set of rules on how to exit and enter the market. Most people, I feel, are probably just hoping for the best, reading company announcements, or, hoping to get a good tip off social media. This is about having a plan and executing that plan. Not to say that it was a particularly good entry. Obviously, hashtag banking crisis conspired to bring the price down, but it did hold firm, to be fair, higher trough through here, and really not a great deal of indication that we were going to get this huge white candle on the bid. Does indicate another key aspect of technical analysis. You can't see what's happening next. So you could be in the worst downtrend and conclude that there's no reason to buy a stock, and then you get a big takeover lobbed in the next day. The key for today's candle is where it closes. And I'll just click update and make sure I've got the latest data on screen, because my data provider gives me on the hour update. So let's make sure we've got the latest data. This close might change a little bit. But basically a big white candle, and this is what we call our demand side candle. It's almost the perfect example of a demand side candle, also called a marubozu in Japanese candlestick analysis, is a long white candle with very small or no shadows on either end. Okay, marubozu translated from Japanese means shaven head. So this one doesn't quite have a shaven head, does it? It's got a little bit of a ponytail there. It indicates that on the open, look where the company opened, there was no pushback. So the company's gapped up from 150-ish into $2, 50 cent gap, 33% in terms of upside, and yet there was little to no supply on the open. How about that? Little to no supply, even though it's gapped up 33%. Now, I've been told by economists that when the price of an asset goes up, typically the supply should increase. Not the case here. In fact, all that we saw on the open was a wall of demand. How do you know there was a wall of demand? Well, look what the price did after that. It's gone up through 210, 220, 230, and close to 250, which is actually the bid price. And we're seeing a little bit of supply come in, not a huge amount. And the upper wick, or shadow, depending on what you want to call it, measures the supply response now. Okay, so if this grows and grows and grows, we're seeing that the profit taking is coming in, that the demand, the short covering, the speculative buying for a higher bid is diminishing, and that supply, that profit taking, is overwhelming that. So this upper shadow will determine really the basis of buy, hold, sell for Liontown going forward on a technical basis. And I can't see the future. I don't know where that's going to close, so I'll leave that as homework to you. A close, really, even just here is fine. That size shadow is nothing to worry about. I could probably go even for a shadow that's as much as 10, maybe 20% would start to worry me, but that's fine. So let's say that current close there is 242. Let's say 240 or better is probably going to be fine to indicate 100% hold. And again, most people say, surely, it's gone up too much. You can't hold that. You should sell it. I say, no. Just listen to what the market's saying. The candle is telling you what the market wants to do here, and that it's not just short covering. Actually, there's some real demand in the system. If it was just short covering, this would have flamed out, and you would see a huge upper shadow and a small body. It's not what we're seeing, at least not up until this point. So happy holder there if you were lucky enough to add that third. If you weren't, do you add a third? Let's see where it closes. I'm not averse to it. It's a mile away, as in miles and miles and miles from my value zone, which is my short-term trend. In fact, short-term trend's all the way down here. So that would prohibit me personally from doing it. But on the strength of an amazing candle, I'll leave that to your discretion. But I can certainly get to hold based upon the candle that we're seeing at this point in time. What we can also do in these sessions is head over here to the Refinitiv Icon spreadsheet. It's part Refinitiv Icon, which is a Thomson Reuters product. Thomson Reuters, one of the biggest data providers, financial data providers in the world. And then me. This is my bit down here. I'd say the important bit. But Thomson Reuters Refinitiv Icon aggregates the broker estimates for various financial metrics. So they literally go and survey, in this case, for Wesfarmers, 14 brokers, and ask them what they think for each of those metrics over the various look-forward periods. And then we also have historical data as well, what's in the bag. I'm not going to stay on Wesfarmers, but if you were interested, doing nothing to the options here that I have, Wesfarmers looks about fairly valued, and which is pretty much in line with the brokers are saying. But I want to head over to Liontown, because Liontown is producing. Actually, it's not producing, is it? It's about to go into production. They're on the verge of getting into production, and that's evidence here with the first profits coming in FY25. Okay, so we've got 9 brokers covering it. That's a pretty good spread for a company that's not making any money yet. The highest target price from the brokers is 281, lowest at 149, and their average target is 194. And note, that's a 27% upside to yesterday's close. This hasn't updated for today, but today's not finished yet. That makes sense. But we did have 1 strong buy, 5 buys, 4 holds. So this is going to be a little bit out of whack. And because it's not making any money now, it is difficult for my spreadsheet to value it, but I can look into the future and say that if I did touch none of the numbers, and because of the fact, and it's a very small data sample, of course, number of years production, number of years profit is 1 from FY25 to FY26, where the earnings are expected to go from 12 cents a share, you can see the earnings line here, to 28 cents a share, which gives me a compound annual growth rate of a whopping 139%. If I did nothing else and left the PE at 9, which is actually very, very low, it would say the fair value, coincidentally, is where it is right now. So you'd say that the spreadsheet predicted the bid price almost exactly. How about that? But I will concede that there's very little data to go on. It is actually very hard to give you a fundamental valuation on Liontown, given the amount of data we have there. But hey, I'll take it. 237 is the fair value target when the stock was 153 yesterday. Let us keep moving in this big lithium sector review, because the big question now is, well, what does this change? Does this mean we should be looking to buy all the lithium stocks because they're all about to get a big takeover bid on the table? And the answer is absolutely not. That is not the case. This could well be the only bid we see for the next period of time. 2 years, 3 years, medium term, whatever you want to call it. I'm not saying long term, but this might be it. So all of the talking heads out there saying, oh, lithium is very, very cheap. Look, let's let the market tell us how cheap these stocks are. So let's go through the list alphabetically, kicking off with Gozi Minerals. This is from the top of my head. They've got a lithium carbonate project in Argentina. They're just about to go into production over there, or at least they're ramping it up. Lithium carbonate prices, if you have not been following my sessions here, you probably wouldn't have known this. But if you have, you certainly do know that lithium carbonate prices have been really falling very sharply over the last few months, from nearly 600,000 yuan per ton into the sort of low 200s there. That hasn't updated for yesterday's price. I'm not sure what it is actually, but I don't think it's going to change the trend significantly, is it? So if your job is to dig this stuff out of the ground and process it and send it to China, then it makes sense that if the price of the mineral is doing that, then your chart's probably doing that as well. And you can see some scratchings in the past where we were suggesting so at least managing some exits on there on Argosy. Up to yesterday's candle, there was really nothing special on this. In fact, it looks like we said last time we updated this, 1/3 is all you got left on Argosy. Maybe you even exited that on this particularly horrible candle. This one here is about as bearish as you can get. So just if you're looking in today's session for pictures that you can take into your investing, this candle here is about as bearish as you're gonna get. Okay, it is bad stuff. So if you've got a stock and you see a candle, it's not just I guess the shape of the candle, because we've got this upper shadow. So we gap down. Notice that little gap there on the open. So yes, there's lots of supply in the system because that's why it gapped out. I mean, people change their minds so much and so negatively about Argosy that the next morning, what the prices that they had been pinned to mentally and accustomed to, pigeonholed into yesterday didn't matter. Like we're worth, another 5-6% less the next day straight off the bat. And then you get the inevitable buy the dippers, don't you? Twitter, Twitterverse, whatever it is, social media, TikToks, I don't know where people are doing it. Oh, it's too cheap. And then some suckers rush in and bought it, right, after the open. And then the proper selling came in and down she went. And again, it got cheaper and cheaper and cheaper, quote unquote cheaper. And yet you can see at the end of the day, there was very little, almost no demand, even though it had gotten cheaper. And then we call this, when you get that candle followed by these next two candles, so the next two, they are just a lock, really, a lock for supply. Supply is dominant in the system. So if you see a cluster like this, and it's not just the shape, it's they're big. This one is big as well. It's important actually that these ones are small because you don't want to see much of a demand side response. You want to see these candles harami style. All right, harami style. We're getting into the Japanese, Japanese. Harami, if I'm not mistaken, is Japanese for pregnant, or it's basically, and I'm happy to be corrected on that, but these candles are sitting inside. Imagine sort of a pregnant lady, holding her belly. The candles are sitting inside the other candle. So that's an extremely bearish pattern. So if you're seeing this pattern on your stocks in your portfolio, for me, I see that and I look at it and I just go, bang. Don't ask questions. Don't pass go. Don't go and look at the balance sheet. Okay, and see what the debt to equity ratio is, or if it's cheap or whatever it is. Don't worry about the PE ratio, the dividend yield. I just go, I need to manage my exit. Okay, and for me, typically that's minus 1/3 of my position without even asking questions. And a lot of people say, Carl, that's crazy because don't you know, Argosy, it's going to be in production, it's going to be amazing, it's going to be worth so much than it is. And I say, look, it doesn't matter what I think. All that matters is there is a giant steam train funneling, towards you, tunneling towards you, whatever the word I'm trying to find there, barreling towards you. Get out of its way. Now, I would have said there's a very high probability after yesterday's candle that this would continue to go down. Look, it looks like the universe has proven me wrong, and we've got a bid elsewhere, which has pushed the price up. Where do we go from here? This is encouraging. It's a half decent candle. It could be more decent because it could be closing near the high, telling me that demand is sustaining itself. This isn't just a flash in the pan. This isn't just a bit of short covering. Okay, this is actual bargain hunting, strategic fund manager buying, all coming in and holding their confidence, holding their nerve into the close in the face of, let's face it, some substantial supply prior to that. So let's see it closed in the high. If it closes even here or better, that's 40, what's this last price there? 46.5 or better, let's say. Look, I could get to a hold. Could I buy it? Absolutely no way. This is not a buy for me. The trends have changed. Before I could buy it, I would need to see price action that resembles, and I'll draw it just very small here, but imagine it coming in in bigger waves through here. And then we need to interact with this long-term trend zone, which in the past you can see how the long-term trend zone reliably gives us areas where we could potentially buy. strategically buy. It's an area of demand, of dynamic support. Okay, but the problem is once you crack beneath it, not only is your trend really over, or certainly in jeopardy, if you get back up to it and it starts to act as not support but resistance now, then that trend is officially over. So that's my concern. There's a long way between me and buying this thing right now. But on the basis of one candle, if you hadn't got yourself out of this, you still got some risk there, then I can see a path to holding it for now, if only to get a better exit price in the near future. Okay, let's see if Argosy has some broker coverage here. AGY. And we've only got the two brokers, but we do have EPS, interestingly. I'm guessing that's not going to be right here because $2.93, for a company that's only 40 cents, that looks a bit dodgy to me. So I'm not even going to spend any more time on that. That just looks ridiculous to me. I'm happy to keep moving on that one. Look, I can't give you a valuation and everything if I don't have enough data. That's pretty obvious. Let's go through. We might do the rest now. We've got a bit of a some parameters upon which to sort of understand some of these moves. Let's have a look at Allkem. You can see in the past we've talked about exiting this all over the place. And I've maybe covered it here where I said, look, the only way I could consider buying it again is if we saw the price action I just showed you. And in the green zone, we see the right candles. Look, we just didn't see it. And I'll go ditto. So really all I need to do to answer the question of would I buy, hold, sell this, I'm happy to hold it on the basis that that candle is a monster. But then we just need to do all the usual stuff now. We need to hit this zone, probably going to pull back, need to get above it, test it, hold it, and then go again. So we've really got sort of, a key area here where we're going to have our first interaction with the zone. And then we're going to have sort of another key area here where I'd actually consider buying it, where it's come back, tested and held the zone with the right candles. And the right candles for me, you all know, is, it's not going to let me do that because I wanted that to stay green. Well, didn't quite happen for me, did it? We'll do that. Maybe it'll go green again. There we go. The right candles for me is a candle that looks like that, and it has a lower shadow. Okay, lower shadows, wicks, they are pointing to areas of excess demand. Lower shadows, wicks are pointing to areas of excess demand. They are significant demand zones in the market. And then we can see with the Maribozu, okay, the other key demand side candle, that is, demand it has taken over. So I guess the first candle is we are seeing a transition. So candle one is a transition from previously excess supply to excess demand. Okay, because typically what you're seeing prior to these, to candle one, is you've probably got a bearish candle, right? So transitioning from excess supply to excess demand, and then this is on the Maribozu will tell you that the trends we're just all excess demand now, right? So we're not transitioning; we're in a demand phase. So happy to go hold on Allkem, if only because this candle suggests we may get better prices ahead. I'm not a buy just yet. That probably will disappoint some who might say, hey, surely we can have a crack at it. I'm not sure why the Excel spreadsheet's not working at the moment. That weird, it was working a second ago. I just might try and type it in. Otherwise, we might have to jettison it for today. Not sure why that's happening. Try one more thing. Just reboot it. No, it's decided to quit on us. That's disappointing. Yep. Okay. Sorry about that. So we are going to have to stick with charts. Okay. That allows me to get through these very quickly. Okay. Finish this review, but I don't want to spend the whole session on lithium. It's going to be ditto, isn't it? Ditto on core lithium, same as Allkem. In terms of the technicals, there's a reason to hold it if this candle stays as strong as it is right there. Okay. If this closes up here, you're going to get some more. Into here, you're going to get a reaction. You're going to see it maybe push up, okay? And only until we get into the green zone could I really seriously consider, with the right candles, buying it. But even then, there's a wall of supply in here. And is this enough of a catalyst to completely eliminate that wall of supply? I just doubt it. I'm still extremely skeptical on many of these charts. GL1, keep moving, right? I mean, you know, these things were largely terminal before that. Happy to go hold on the basis of the candle if you've got it. If you don't have it, I'm not a buyer. It's too early. GLN, ditto again. Sorry for those who wanted a more in-depth review, but unless I can see the signs that the market is accumulating, the market is buying those dips, right? All I can see right now is the market is selling rallies, and we may well see those supply side candles come back in. Like, nothing would surprise me less. Is that the right way to put it? Nothing would surprise me less than to see something that looked like this in that zone. And, you know, keep an eye out, you know, keep watching to see if I'm right. Let's say about there, if you see this candle in that zone, it just makes so much sense to me that would happen. Okay. And we get another round of sell the rally, not buy the dip. So if I say I can hold IGO, you can see all the exits we've had prior to this point. If I say hold it, it's only on the basis that I need to see how it goes around those well-defined supply zones. So we know there's going to be supply in the market there. How does the price respond to that supply? Do we hit that supply and get repelled, which is that candle there, telling us that it's not just, you know, the shorters aren't done here. This isn't short covering, bang, they're out. They're taking new shorts on. The people who are in it are looking at that rally as a great opportunity to get out. Is that what we see there? Or do we see white candles print in there? And if we do see the white candles print in there, it's telling you we're not afraid of that supply. In fact, we're taking it out. We're absorbing that supply. We're putting fresh money into the market. So unfortunately, not much I can do on that one. I could go hold if you've got it, just on the basis that at the moment it's a great big white candle, but it needs to close there. We need to see where we are at 4 o'clock this afternoon. INR, a little bit obscure, what I said about a bunch of the other ones. We've talked about Liontown, Mineral Resources, a bit of an iron ore stock really. But this one's holding. This one's actually still fine, I guess, on the basis that it's still holding that long-term uptrend. You can see minus one third previously. So I'm not sure if anybody listening regularly still has it. What would it take to add some risk back? You know the drill. Here, here, here. Give me the right candles in the green zone, and then I can contemplate it. But until then, there's not really a whole lot I want to do with it right now. PLL, which is Piedmont Lithium. One of the better ones, to be fair, in terms of, you know, hasn't completely moved into a long-term downtrend. But again, there is a danger zone here, which I'm going to draw in red. You really need to see the right candles in there. If you see the black candles with the long upper shadows, or just the black candles in there, that is not great. And then Pilbara, very interesting. This one, you know, for me has changed trend. I think it is sort of long-term downtrend stuff. Wonderful candle to date. Look, I you know, not going to dance around it. A very strong candle today. If it can close, you know, around this level, I think it's looking better. Again, I can't be a buyer simply on the basis that the market has not proven to me yet that we are buying dips. It's still sell the rally sort of stuff. So let's see how it responds here. We're at the key zone now. A few of them, they sort of had to get to the key zone. I think this is a pretty important area. Let's see plenty of white candles come in here. You know, the right price action. So buying dips, that's what this price action represents. It's buying dips. Okay, it's not selling rallies. You know, take out that little trend line there even potentially. Not that I'm a big believer in trend lines. And then let's talk about it then. Until then, just happy to be out of that one. No reason to jump into it, but happy to hold again on the basis that we get a good close today. And we're pretty close to the end, but not last but not least, Sayona Mining. And this is one which I have said in the past, that's not one I'd like to own, as there's just this huge social media obsession and following with this company. I don't get it from the chart. to be honest, but I'm sure that many of those Sayona zealots could sit me down and explain it to me. Unfortunately, I'd probably want to go and sit somewhere else by myself and play Tetris. But yes, look, as I've said many times, is it possible, and this is a great little segue, is it possible that a chart that just has nothing going for it all of a sudden prints the biggest white candle like Liontown does? Yeah, it is possible. We don't know what's going to happen next. All we can do is base our decisions not on what is possible, but what is probable, because let's face it, anything's possible, right? But what is probable is there's not a lot of demand in the system here. There's not a lot of interest. There's not a lot of excitement, apart from, the minnows who are talking about it on social media. I would suggest the people with serious money are not seeing the benefits here and not getting involved just yet. Not to say they won't, but if they do, their fingerprints will be all over this thing. Their fingerprints will turn up in higher peaks and higher troughs. Their fingerprints will turn up in white candles and lower shadows. Their fingerprints will turn up in these trends turning around so that they're double green again, that they go from resisting upside price movement to supporting it. And then I'll start to look at Sayona. I'll tell you what, I'll be the biggest Sayona fan you've ever seen if it starts to look good again. It's just not there right now. And in fact, I'd suggest to you that's one of the weakest responses we've seen to the good news today. So people who think I hate Sayona, it's not the case. It's not the case. I don't hate any stock. I don't love any stock, to be honest, even when they're going up. You don't want to love them, right? They're not your family. They're not your kids. They're not your wife or your hubby. You shouldn't love your stocks, okay? You have to love your family, right? You got no choice. But don't love your stocks. Vulcan, that's pathetic. Nothing going on there. Okay, that is the lithium sector review. Let us get to William, who asked about Brambles, which I'm going to say is going to be a little bit boring right now, isn't it? Let's have a look at Brambles. Boring old Brambles is not that boring at all, is it? It looks amazing. It looks wonderful. And who would have thought a company that, let's face it, what they do, pallets, that's pretty boring stuff, could look so good. And I tell you what, I'd buy Brambles any day of the week over pretty much any of those lithium charts that we saw earlier on. It has moved a little bit of a ways away, but not so far away from my light green zone. But happy to add some risk here. Look, I know it's a bit of a dud candle today, isn't it? It's a dud candle today, but that's okay. Look, one black candle does not a reversal make. You might want to wait just for another white candle before you bought, but I think we're kind of just being a bit pedantic there. I like the trend. So, in terms of, your long-term self-managed super fund style, looking for a boring old blue chip, I don't think you can go too wrong here. Trade, I don't know, but I'm happy to go plus 1/3 on the basis of everything I can see there. I think this looks pretty good, actually. So let's change that to a color that's a bit easier to see, plus 1/3. We've got a wonderful short-term trend, which I've already told you about, and we know also that the long-term trend here is very well established. We can see that the trend zones are supporting prices here. Look at this. It's all textbook kind of stuff. The price action is a bit overlappy, but that's Brambles. You can see Brambles very rarely has clean price action anyway. It's a bit of a slow and steady one. So understand what you're getting yourself into. I wonder if it hasn't come back. But I don't know why. It just stopped working. So I can't give you the fundamental valuation on Brambles, unfortunately, William. And I suspect nothing short of a reboot of my system will bring back the spreadsheet. I am trying to do one thing offline to see if we can get it back. Okay, let's head over to King, who is asking for, let me update prices one more time. And I am getting the messages coming in from the streamers as well. I'll get to yours in a second. No. Oh, there it is. Okay, there you go. Try and try again. Never give up, hey? We wanted Brambles BXB. For William. Okay, so let's go 16 brokers covering. So very well covered. Average price target, 13.85. It's pretty much fair value. That is based upon yesterday's price, so it might be a little bit different today. Then I head to the rating. So we've got 2 strong buys, 8 buys, 4 holds, 2 sells. EPS line, I want to see bottom left, top right here. Really important. I'm not saying it's pretty lumpy. I can forgive some lumpiness if there's a pandemic, a global pandemic. Okay, I can forgive that. And then they had all sorts of supply chain shortages and chaos, and now inflation, cost of living. So, I can forgive some depressed earnings in those years. In that light, it's actually not that bad. Looking forward, it gets very good actually. So the brokers are really bullish on Brambles. But if we go here, make this right, and we'll get the right level here. EPS, 8% compound annual growth rates. Okay, it looks bottom left, top right, but it's not getting, in terms of percentages, it's not huge, is it? But respectable, 8%, it's about the market average. Now, if I can get market average growth, that's okay. If I can get it cheaper than the market average price. And the market average price typically is about 15. So your PE for the market in the long run is 15. 10 is cheap, 20 is expensive. All the crashes came when it was 20 or above. Most of the big bear market bottoms came when it was 10. 15 is boring. We're currently at 13.8, by the way. I tweeted that earlier in the week. Check my Twitter feed. The data is there. So this dynamic F is what the brokers are saying, what the brokers are working off, their median forecast PE. Okay, so it's a good yardstick for what we should use. What they've used in the past could also give you a hint as well. Okay, in the past, they've been paying much higher for Brambles. They've been paying up to 30 times, and really, if we say on average, around about 26 times. Now, if I type 26 in here, or if I just go dynamic H, which is historical, it becomes 26. How about that? We can see that Brambles is grossly undervalued if you want to use historical valuations. And that, ladies and gentlemen, is the risk in applying historical ways of thinking to the market. You can't do that. And I do know there are organizations out there that tell clients what to do or come up with ideas of valuation based only on historical data, which for me, I just think is very, very risky. And I say, look, you always want to look forward, and we're using the broker consensus here of 16.4. If we use that, what the brokers are kind of saying we're comfortable paying going forward, then it comes out as fair value, which is not dissimilar to this here. And is that reasonable for 8%? Look, it's not unreasonable, but I wouldn't say Brambles is a screaming bargain based upon anything I'm seeing here, nor is it though, nor are there any red flags to say that you can't run out and buy it either. Okay. And I think for some people, they love that. They go, okay, chart looks great. And you know what? The fundamentals are okay. That's, for some people, that's all they need. Some people say, I need the fundamentals to be brilliant. I don't care what the chart says. Hey, it is personal preference. One isn't right or one isn't wrong. It depends on what you want to do, right? And I'm smiling because I know which way the right way is. Okay, VEA. VEA, I was being very, very kind there in my comments towards fundamentalists, hardcore fundamentalists. Okay, let's go for King here, VEA. He's got a small position just for the dividend yield. I'm not sure if I like that idea, King. I bought it for the dividend yield. Okay, I bought it, the dividend yield was 8% per annum fully franked, but it went down 8% in the last week, and it's gone down 28% over the last year. Well, not sure about that. Buy something that looks good on the chart, that's got great trends, that's got great growth potential, and that is always going to be better for me than just buying for a dividend yield. But I have to focus on the analysis, and the analysis says, hey, I can buy the chart. The chart looks great. It's a bit like a Brambles. It's going to be slow and steady and boring. Okay, I can't see this going vertical anytime soon, but it should continue to give you capital stability. I think that's what you're after, isn't it, King? You're happy if you, I should say, if you're happy with the dividend yield, then capital stability really is all you need. You're not giving up that dividend yield. I think you'll do better than capital stability here. I think there's a nice uptrend in place, and it'll be gentle. There'll be a few percent for you in it here, plus whatever dividend yield you're getting. So happy to go a hold on that one. Dare I look at this? I have to be super quick. I'm a little bit curious because, the chart looks good. Let's see if the valuation matches up. And maybe there's a bargain here. We do have 10 brokers following it, so it's widely covered. I think we can therefore have some confidence in the data we've got on screen. We have 2 strong buys, 5 buys, 4 holds. The average price target is 328, which gives us a decent whack of upside, as well as your dividend yield, not too shabby, 6.4%. King. So I can see why you're happy with it. EPS line, bottom left, top right, hardly. We had a problem there, but it's a pandemic, so let's forgive it and let's look forward and say, well, we're actually going to see a bit of a depressed earnings this financial year, and then again and again, and it's not great, is it? That's not that great as far as I'm concerned. And if I match the financial year, we're going to see here, we've got really flat earnings over the outlook period. So that's not getting me excited when the market is, I can find, it won't be hard to find, because the market average is of 7-8%. It won't be hard to find companies that have better earnings growth going forward. That doesn't mean I can't buy this, but I need to get it at a really cheap PE to justify that, okay? Is 10.8 cheap enough? It's certainly cheaper than Brambles. You can see how these things match up now, okay? This is the fundamental analysis I like to do, okay? I'm not going to sit there and read a company balance sheet, because these 10 brokers are going to do that better than me every day of the week, okay? I don't have time, I couldn't be bothered. But if I base my fundamental analysis on consensus, on what the brokers are saying, it's a bit like my technical analysis, isn't it? Where I'm basing my buy, hold, sell on what the trends are, what the consensus is. I'm basing my fundamentals on the same way. We saw Brambles, market growth, market PE. This one, hardly any growth, but it's cheaper on the PE. It's telling you stuff makes sense in markets, right? There's no free lunches. Is 10.8 cheap enough? Probably not for me. And that's why my model here is saying it's still 5% overvalued. Ideally, this needs to be even lower to justify this growth, this price and this growth. So would I call this a red flag? Let me see. 10's a very low PE compared to historical, but it's probably right going forward. I don't think this is cheap, but you make of that what you will. Okay, let us keep moving. I'm going to move through the rest of these. We've got Colin confirming that the AV is good, and Perry and Craig. Thank you, gents. Doug, ABB, still good to hold. It's come off the boil, hasn't it? But no, I think that's still okay. Look, I think that's fine. You can see where we're looking to add a third to it in the past. I don't think we need to manage our exits just yet. Certainly this candle is not great, but hey, we did have a hashtag banking crisis as well, didn't we? I think as long as this level holds, the great thing about it, Doug, is I think we've got a really clear-cut line in the sand. So we know that there's demand down here, okay? Demand. There's demand down there, okay? That trough low, candle low, that low, great candle, followed up here. This candle is fantastic. It's telling you that when we get down here, we've got this thing called accumulation. It's buy the dip, okay? There are fund managers, right? Down here, they're sitting on the bid, aren't they? And as supply hits the market at this level, right, they are standing strong, right? They are supporting this thing, the price, right? So what does it say if the price starts to trade down here? What does it say? What does it tell you about the demand, which has in the past been so rock solid? This is technical analysis, ladies and gentlemen. It is what happened. It's not what is about to happen. You know there was demand there in the past. You don't know if there's going to be demand in there in the future. But what I can say is, if the demand's gone, should you still hold it? I mean, where did they go? Why aren't they still there? Shouldn't they still be? They should still be there. I thought they were going to be there. They were buying it because they thought it was cheap. Now they're not. Okay, do you want to ask yourself, do you want to waste your time asking yourself all those questions? Or do you want to get the hell out? Because guess what? They're not there anymore. And the other problem for this, if we do get there, is the fact not only that demand has just disappeared, evaporated into thin air, but your POSs are definitely, clearly going to be falling, okay? And your pod's gone. So, yeah, you would have to, if you're following the rules, and you don't have to follow the rules, you can do whatever you like, but my rules suggest that you would be managing your exit there if you haven't already, okay? I don't think we would have been in more than a third of this. So if you got in a third, wherever we got in, you got out a third. Hey, it didn't work out, but, hashtag banking crisis, a lot of things didn't work out, right? So I won't, because we're not looking to buy it right now. Let's skip the fundamentals and keep moving. Look, it can start to look really better. I've given you the most bearish case because the question was around, look, what do I do? I've got it. But if it starts to push back through here, see how things change. Okay, well, same pods. Pods aren't rising, but they're holding, and now we're taking out POSs. right? We're taking out the supply. That would actually start to look very interesting. I'm not sure if I'm a plus 1/3 at that stage, but with the right candles, I could be, because this short-term trend zone clearly is supporting price now. This long-term trend zone is supporting price. It's gone from, in the past, pushing price down to potentially pushing price up. And that's probably why the demand's there. Okay, so back through here, starting to look interesting again. But let's let it get there. Let's make a decision. But you know what candles I need to see when we get there, Doug, anyway. You're an expert. You've been listening to me long enough to know those. From Craig, WDS. But that's not what we want. We're going to find WDS, which is Woodside Energy Group. One which we've been positive in the past. I think last time we talked about this many moons ago, we started to say probably going a bit neutral on it. I don't think I've called it a sell yet. Simply because we haven't covered it. But you have to say the most optimistic investor would have to think about managing their exits on a breakthrough here. Where's it now? Look, if you didn't, I could hold it. Like if you haven't managed your exits, I would say don't do that just yet. Okay, I think we're starting to see some signs that demand is coming back in. Okay, hopefully to rescue this one. So we're seeing, same sort of pods there, but rising POSs through here. If you don't know what a pod is, it's a point of demand. It's an area in the market where we've seen demand manifest itself in the past. A POS is a point of supply. It's where we've seen supply manifest itself in the past. Where do I see rising points of demand? That shows me building demand. We want to see points of supply being taken out and setting new higher points of supply, because we're always going to get points of supply. Things go up a bit and people say, oh, that's good, I'm going to take some profit. And it creates a bit of excess supply. Okay, but we want to see them at rising levels. So that's okay. Happy holder, not a buyer. You know my rules on buying. It needs to do a whole lot more to get to that point. But happy holder in the meantime. And let's just see. This is all important now. And I probably let me keep that big green box, because this zone here, and it's going to change color in a second. I'm going to make it a color we don't use all that often. Let's maybe go there, whatever that color is. We need to watch the candles in there. Okay, if we get some nice white candles in there, it's got some legs. If the candles are black in there with the upper shadows, you know the ones, then I'd be concerned. And if you haven't already managed your exit, maybe that's where you start to say, oh, look, I got away with a bit. I didn't have to sell at 31. I'm getting 34, but I'm going to lighten the load here just in case. Okay. So not a glowing endorsement for Woodside at this stage, but holding on the basis of some improvement there in the recent price action. Damien has got Aristocrat, which is ALL, which again, we got very positive on it not that long ago, didn't it? Because right through here, it started to look amazing. I really liked it there. I would have said at that point, I probably did in one of these sessions, that the only thing that bothered me was the proximity of that point of supply. But the price action, the candles, the trends were looking so good, I'd happily add some risk even in advance of that point of supply, okay? Because we're not going all in. The most we would have been doing at that point is about plus 1/3, right? So if it doesn't turn out, hey, at least we didn't put all of our money in. And if it maybe went into this point of supply, so if it interacted with it, it did the right candles, started to do all the stuff we like, then we could add some risk to that and go in for the next third, and maybe the next third up here, and then build our position as we go. Look, hashtag banking crisis. Didn't work out that way. I can hold it. I can still hold it, Damien. These are great candles. Look, I mean, this is what drew me to it before, is just all these white candles. So yes, you can have wipeout days on the market. I'm betting that was one of them. Maybe these were as well. But we've still got this accumulation, I think, from the funds going on here. So happy hold on that basis. Not that, I wouldn't be attentive to signals that something sinister is going on. We don't like this. It has happened. We can't ignore it. It took out some demand through here, what we thought would have been a demand zone, but demand zones are spongy, right? Once we, got our nerve back about what's going on in the world, the fund managers are back in. So we're okay. We want to see this sort of stuff happening again. Oh, look, it doesn't have to pull back, by the way. If it just goes up, that's good too. But if it does pull back, if we start to see, because we've got some supply now at this level, which is frustrating, isn't it? If we start to see a reaction from that level, and the candles, you'll see upper shadows, black bodies. We want to see the demand still rock solid. We want to see the rising demand coming in and saying that we're okay here. So something in there, I don't know if I'm adding risk beneath these supply zones though. But it would help me grow my confidence in holding on to what I've got, if you get what I mean. Not the screaming buy. So I'm going to just skip the valuation until we get something that's just so amazing. We have to look at the fundamental valuation. Let's go to Newcrest. I think we should look at the Newcrest valuation because this looks very good. I've been very positive on this one in the past and happy to be a holder. And you can see why I'm positive. I mean, it's one of the nicest charts I think that we've seen today with rising short-term trends. Do that one and draw that again. That's what I want to draw. And we can see that the short-term trend zone is supporting price. That's very good. And the long-term trend's actually turned up. That's quite handy too. Price action looks very good. We're seeing these high peaks and high troughs going. No doubt we're going to see a bunch of supply coming in here. And, it's actually starting to get a little bit uncomfortably close, isn't it? But I'm happy to back this one until we get there. And even then, you'd have to see some pretty nasty candles in there to want to do much with it. So happy holder on Newcrest, no complaints. Could you buy it? I don't see why not. If you've got a bit of a medium to longer term view, I think it's fine. If you're a shorter term trader, ideally you want to pick it up on the pullbacks to the light green zone. Okay, that's the best place to get in with some white candles, some nice big white candles. It's not there yet, is it? So depending on, I guess, your outlook, medium to longer term, it doesn't matter. You don't have to wait for the pullback to the light green zone. You're backing the long-term trend. If you're a shorter term trader, you're trying to time that entry. Probably not right now. Let's have a quick look. I'm curious to see what this valuation here is on Newcrest Mining, Australia's premier gold company, and to be fair, can be considered a true major global producer. So let us say that there are 15 broker estimates here, and we have an average price target actually a little bit below where it is right now. So 2.8% beneath the last price, assuming of course the last price was 26.53. We have a hold average with no strong buys, 6 buys and 9 holds. The EPS line is, well, I was going to say it's bottom left, top right. It's not, is it? It was until there. So it was until there, but we've seen a dip here. Okay. Gold price pulled back and their costs increased 10, 15%. They're still a very, very low cost producer, one of the best globally, but their costs have increased. And then we're seeing another impact here. Okay, maybe this will change. Don't forget, all of these numbers keep changing. They are so dynamic. The gold price has gone back up, and that will stimulate some of these 15 brokers to adjust their numbers for Newcrest. And if we come back next week and this is all different, don't be surprised. That's what should happen. Maybe these will change. But look, all we can go on is what we got now. And actually, we've got a couple of years of pretty lousy growth before it picks back up again. And for some reason, FY26, I don't know what's happening there. Big project coming online. That's where the big growth is coming. And it does skew things a little bit because you can see that 32% growth rate in FY26 is dragging up your -5, your 8 to give us an 11% compounded growth rate, which on the face of it looks better than the market. So, understand, take that with a bit of pinch of salt, and you can adjust this if you want. You can go say moderate risk rating, which will increase the discount rate applied to the future cash flows, which you can see how it changes things, okay, so quite significantly. Okay, so let us work on our target PE now. 21.1 seems reasonable. Is it reasonable for 11%? It seems a bit high for 11%. I think that's high for 11%. I think for 11% growth, under 20. You want to try and get under 20. So that looks a bit high on an absolute basis. Is it high compared to the historical range? Look, it actually is. It's at least mid, but you wouldn't say 21's a bargain. Okay. So I think this is on the high side. And therefore I don't think this is fair value. So what would I pay? I think this is erroneous here. Okay. Just because these are too high. And I don't think the market's actually paying that in real life, to be honest. I think probably the takeovers had some impact on that. So let's say for 11%, I'd happily pay 17. Okay. Lo and behold, there you go. And it's not a fudge. It's just for 11%, 8 is the market average, 15 is the market average PE. 8% growth, 15 PE. I've gone, well, 11%, I'd pay about 17 PE. And lo and behold, it comes out about where the market is, which is, I'm guessing, what the brokers are actually doing, not what they're sort of saying. So that is Newcrest. But any red flags there? Why we can't buy it? Not really. Is it a screaming bargain? Not really either, is it? Okay, let us keep going. Stuart's got thoughts on Newcrest. Yes, and the failed Newmont bid. I think I've covered that. I think you've got to hold it even without the bids. Gold price still looks okay. Is it better to buy the physical product? Yeah, I think it is. Like, I mean, if you're really a gold bull, you're better off buying gold, because I just talked about the problems that Newcrest and many of those other gold companies are facing. They're facing those rising costs. So, something like SBM, you look how horrendous that's been. They keep missing their production targets. Their costs keep going up. Even Evolution, which is, it's been a quality company in the past, but even they are struggling with their cost base. They all are. Even something as good as NorthernStar, is still experiencing those rising costs. As I said, Newcrest is. So I like NorthernStar. Happy to hold that one, by the way. Evolution, I've been bearish on that in the past, haven't I? EVN, sorry. Look, I could go a hold. It's not a buy. Let's do Tour de Gold. Perseus, I think, is shaping up really well, actually. I don't think I'm a buy yet. What did I say? Plus 1/3 in the past. I wonder. Maybe I said on a close above that old point of supply, and I'll reiterate that. I think wait for a close above that point of supply for Perseus. I think that would be the better way to go. There are many others, probably more than I can remember. Gold Road is one that caught my attention yesterday, because I thought, okay, that chart's actually starting to look really good now. You can see how it's turned around. It's holding that long-term trend. Long-term trend's re-establishing. Short-term trend's okay. The candles look good. The price action looks okay. We're seeing sort of that trough there coming in at or above the second from the last peak in here, and this big peak here. That lower shadow, the white candle. Today's candle's pretty good. Could I add a third? Oh, look, if I love the stock, for whatever reason, I could go a cheeky third there. But I am concerned, that we've got a bit of supply up here. But we've got reasonable reward to risk till we get there. If I'm targeting that on the upside, I'm putting my stop loss kind of around 150. I've got at least 1-to-1. So I think we're okay there. That, as I said, caught my eye yesterday. I'm trying to think, look, that's not that good. Tietto. No, I don't think that's very good. Why can I not remember gold stocks right now? Ramelius, this is one that I think looks quite good. I think we've said in the past, happy to add some risk to this, and I'm reiterating that, happy to add a little bit of risk there if you're desperate for gold companies. I'm sure some people will be shouting at me now, but do shout if there's a gold company I haven't thought of. It's my own on the spot brain not working here, and maybe we can find some in the list if I can find the list. Where is it? Healthcare, Infotech, Mining, Gold, Newcrest, NorthernStar, Evolution, Perseus, ADT, Silver. Yeah, this is a nice chart. Happy to have some risk in that. BGL is one we've said in the past. Not a great candle today, but I think still looks good. Emerald Resources, still fine. I know, bit of a double top. I think it's okay. Not panicking there. I've done Gold Road, Red 5. No, not interested in that at all. St. Barbara, Ramelius, I've done most of them. Let's have a look at the gold price just very quickly before we move on, because the question was about, should I just buy gold itself? And yeah, I'm reiterating, if you think gold is going up, that's probably the best way to do it. We're having a little bit of a response here to 2000. I'm not surprised by it. As long as this is okay, we stay above that. Let's just give it some room. I would like to see the right candles, the lower shadows, the white candles pop in. Literally here, I think, is the place to do it. And certainly above here. Don't want to see it close beneath there to maintain this upside momentum. And I think if we can close above 2000, I think we'll go up and we'll tickle those highs again around 2070, 2073. Okay. But after that, I wouldn't have a clue. I'm not even going to attempt to figure that out. Okay. Gold is only ever a trade for me. I'm not a gold bug. I mean, gold for a good time when it's going up, but certainly not a long time, because the history of gold is it don't stay a good time for a long time. Okay. And if you're a gold bug, you know what I'm saying is true. Let us go to the list here for Hanelli, who wants Sonic Healthcare. It's fine, Hanelli. I know it's a bit boring, isn't it? It's Hanelli saying my advice was 100%. Running profit's great. I wish it was a bit faster, but I think it's fine. I mean, the whole market is lousy, let's face it. And we know that the whole market is lousy and Sonic is doing better than the market, because if we look down here, it is thrashing the market. And that's what this is saying here. This green histogram is saying Sonic's thrashing the market. The rest of the market's lousy, but it's hanging in there. I still like the white candles. I know there's a bit of a black one today, but I think it's fine. Not fussed about that one at all. Hanelli's saying, where do I take my profits? Well, let's see, let's see what the candles say. Maybe at 36. but let's get there first. Today's candle's frustrating, but I don't think it's enough to abandon that one just yet. Deborah's asking for comments on Xero, which is one of my favorite potential turnaround plays. And I've been really bearish on Xero. Okay. And this gets back to maybe Sayona. I've been accused of hating stock. I don't hate stocks. I think at one stage I was accused of hating Xero by people who love Xero. I'm sorry, Xero lovers. I just called it, as I said, it was a giant downtrend with no respite. Okay. Until, look at this. Look how good my trend ribbons are. Look how awesome they are. And then here, but look what's happening now. Okay. That trend ribbon has gone from the ultimate supply zone to, look at that shadow, look at that shadow, look at that little shadow in there, look at this little shadow here, look at this uptrend, okay? Something's going on. Fund managers have decided they want to buy this thing. I love the gap too. I like the gap. People say, oh, gaps have to be filled. No. The person that said that read a technical analysis book and they're just quoting verbatim what was in that book. Okay, so it's fine. Is it a screaming buy? I don't think so. I'm happy to have a little risk, even though it's looking a little bit crappy today. So we're just going to say, I just like these candles. I'm happy just to go close my eyes and just go plus 1/3, because that's the way I operate. I go, hey, you look all right. Have a little bit of risk. Oh, you look all right. Have a little bit of risk. You look amazing. Have a little bit of risk. Okay, you look amazing the second day. Have some more risk. You look amazing the third day, here, have some more risk. Fourth day, have some more risk. As long as you look amazing, have some more risk. But I don't mind saying, hey, you look okay. Have a little risk, okay? If it does the right thing, I'll add some more. Where will it do the right thing? I love these little shadows in here. I like these candles. Something's going on. Trust me, something is up here. Don't you hate it when you're drawing a line, when you think you're drawing an arrow? Through here, even before that, even if this little candle turns around, we get another little white candle, low shadow beneath that, I can add a risk. But let's say on a close above that level there, yes, I would be happy to give it a little bit more risk. Until then, look, happy holder. If you don't have it, I said, hey, I don't even mind buying it here. Now, the most curious thing, look, part of this whole Xero business, right, is the fact that interest rates have tanked in the US. Okay, they've come down significantly. And that helps stocks that have astronomically, ridiculously, I mean, we're not talking a little bit ridiculous, we're talking totally absurd, obscene, if you like, price to earnings ratios. And Xero falls into that category. So look at this cell here. So follow the mouse down to here. This is this year's forecast PE. What are we in now? We're just about to head into April. So we've still got April, May, and June to go. So a quarter to go. The current PE, based on brokers' forecast, 478. If we go on historical earnings, 941. So it helps Xero, right? We can increase our valuations. And what it does, shall I show you this? So this is the discount rate, okay? And this is a key factor of all company valuations. So your big brokers, your fund managers, your UBS, Goldman Sachs, all of those. Highly trained experts hold floors in some gleaming office tower in Sydney of people with half an alphabet after their name, much smarter than you and much smarter than me. If we multiplied our intelligence together, we'd only be a fraction of their little fingers worth of intelligence, all right? And this is why I don't bother doing my own fundamental analysis, because why compete with them, all right? Just get their numbers and then just follow them. But they will change this risk-free rate. So at the moment, I think 3.5 is appropriate, but it wasn't that long ago. And I'll just use a number. I'm not saying this is the number I had, but just to show you the difference. And let's go here, and let's go here, because we need to match up the FY so we get a valuation. So watching 31.75, right? Watch 31.75. But if I change this to 5%, it comes down, okay? And actually, I thought it was going to come down more than that. That's really unimpressive. I thought I was going to make a huge statement there. The point is, the higher your risk-free rate, the lower your valuation, okay? I'm just going to undo that. So I want to keep it back to where it was, and you can see that improves, okay? But they probably will use multiples of that depending on their risk level, okay? But the point is, this is why stocks like Xero can go up when the risk-free rate comes down. And maybe it had such a smaller impact than I expected because the PE's maybe too high, although I would expect it to have a bigger impact then. Anyway, let's quickly do this one. 16 brokers, 8% upside if you believe them, 2 strong buys, 9 buys, 3 holds, and 1 sell. So very polarizing old Xero. EPS line, you can see it was losing money not that long ago, but it's made some money. It's having a little bit of trouble here in 2022, probably why the share price came down. And then we're expected to have exponential growth from there, 119% compound over the forward-looking period, which is going to be better than any stock you'll probably find on the ASX. So what would I pay for that? Well, I wouldn't pay, oh, there you go. So that's why that's crazy, because I wouldn't pay 17. I'd pay way more than 17, okay? And this is saying potentially the brokers are using a forward PE of about 84. That's a bit high for me, because it's even for that, it's still high. So I don't know if I believe it's 76% undervalued. I tend to cap things out around about 40. I'm not saying that's right or wrong. It's just a personal preference thing, which would suggest that it's less undervalued. Yeah, it's almost saying it's high. It's a bit overvalued. But unless I go into Xero and say, hey, look, I'm more of a 50 kind of guy or more of a 30 kind of guy, I don't know. But I'm just telling you, that's typically where I cap out. But it's kind of irrelevant. I'm looking at this more on the chart. There's no major red flags in here. I mean, the brokers are pretty happy with it, so I'm not going to defer too much, because that is such just a rule of thumb sort of number there. And maybe this opportunity requires slightly high PE. If you're curious, if you're a cap out at 50 PE, you know, it kind of gets to where the brokers are. If I go into say 51, I'm just trying to match these two. You'll see what the market is actually paying for it right now. Okay, it's not quite that. So it's around about 50, 52, I think. Okay, let us keep going. We need to get to the end of these lists, so I won't do any more fundamentals. Let's do Santos. And it looks okay in that it's just hanging on by its fingernails to the bottom of the range. We talked about ABB, about the demand. I'm pretty sure it was ABB. It demanded a particular level, and that demand was just hanging on. And what does it mean if we crack that demand? It means they're not there anymore. It means they got all the stock they were there to bid for. Think about that. They got all the stock they were there to bid for. Now, who else is going to start bidding? Well, the price will have to come down to entice in the next bunch of bidders, right? That's how economics works. Price comes down, you might entice in some more demand. I'm really concerned about this. I know it's bouncing a little bit here, and you can go hold on that basis, but if it start to, put in some closes beneath that range, I've said here, look, minus 2/3. I don't know what that means, but anyway, I wouldn't be hanging in there, just between you and me. That is a real concern. You might want to hold it on the basis that it's above the range. That's all I could say about that. But is it a buy? No, it's not a buy for me. I think I did IGO previously. I think I did refer to previous comments on that, as I also did Core, I'm pretty sure, for David, in which I said what needs to happen to get it back to a buy. And it's a long, long way away from that. So are there bargains out there in the lithium sector? Perhaps. I can't see the future. All I can say is the risks are too high for me to want to take that chance just yet. Barry's saying, with regards to end of day trading, one method is to do your buying and selling at the end of the day or at the start of the day, which is absolutely correct. And there are pros and cons of both. I like to do it just before the close. That's my preferred method, but after the open is also okay. I just find after the open, you end up getting a bunch of gaps, which can ruin your trades a little bit. So I do like trading just before the close with the candle as close to finish as possible. But again, there are some risks in that as well. From Glenn, asking about MNB, which is Minbos Resources, which is not that one. And if I do this, it will magically appear very soon. There it is. Okay. Look at very, very decent trend. It's very overlapping. I'm guessing it's a little bit liquid. It doesn't trade all that much. Glenn probably knows better than me. But Glenn, I can't see any reason to sell it. I think it looks really good, actually. Would I buy it? Look, if I was really bored and had nothing else to do with my time or money, yeah, I can't see why you can't add a third here. I like the trends. I even like the candles, as sketchy as they are. I'd love a bit more volume here. But certainly the fact that it is beating the market hands down means that each day, hashtag banking crisis, hashtag Deutsche Bank, Credit Suisse, whatever it is, the buying is still there. And isn't that important when you think about it? Okay. The demand is resilient. Now, there's plenty of supply around as well, isn't there, Glenn? I think you know that because you probably watch the stock, you watch the you watch the market depth, you can see all the bloody looking all the way up the levels, half cent levels, zillions and zillions of supply, but the demand is resilient, and that's half the battle, isn't it? So happy to go hold on that one. If you don't have it, I can't see why you can't add a little bit of risk. Craig reminding me of a Resolute Group, not RSG. I reckon that's what you wanted, Craig. So forgive me if I don't do the other one. This is my favorite gold chart right now. I just think it's so far away from my green zone. But the candles are so good, happy to add some risk. I think I said that last week. We might have done a gold sector review. That still looks amazing. No complaints about that one. If you're on it, I can't see anything so sinister in the chart to suggest that you wouldn't continue to hold it. Okay, I'm going to go to the chats now. I've got Shireen asking for SRG. I still think it's fine. It's had a bit of a wobble there, hasn't it, Shireen? Probably because of banking crisis. I think it's fine. Long-term trend is holding, but let's start to be attentive now. What we don't want to see, you see where these POSs have come in. We don't want to see POSs building here. So I don't want to see another POS come in around here with some black candles or upper shadows. That would concern me. Okay. So happy holder, just keep an eye on it. Okay. We again don't want to be stuck in something more longer than we should be. NEU. Now this one here, I'm going to delete it all because I'm pretty sure last time I told you we're going to hang on to it. I said maybe we minus a third at $10. No, we didn't. Oh, well, this is very interesting. I do remember this very clearly. On the day, I said, normally I would get out a third at 10, but that candle is strong enough. Don't get out a third and hang on. I said, if you did get out a third, you still have 2/3. But right now, I'm going to delete all this because I just want to talk about this. Well, I'm going to say, look, until you see that, you don't have to worry. So that candle there, let me not delete it all then. So I just want to look at the price action here. All right, so I need to be able to see it. Okay, so this is amazing, okay? This is not a pullback. That is nothing. This is going higher. I would even add some risk. I'd add some risk on this one. You could wait till it closes above whatever that high is. That high there is 1346. You could say 1350 or better. My hunch is this is going higher. The fact that it hasn't pulled back suggests that demand is, think about how strong demand must be. When stuff goes up in price, the natural response is, get out, take profits. Hardly anybody took profits. How do I know hardly anybody took profits? Look at the chart. It's gone up and they're still demanding like crazy, even if people are taking profits. Well, actually, people did take profits. People did pay. There was some supply here, right? There was some supply down the line. There was some supply there. But that's what's awesome, is even though there was some supply that hit naturally, the demand is a monster. I'm still happy to add risk on this. Isn't that interesting? I'm sure a lot of talking heads out there would say, I don't understand this one, but it's gone up, so get out. No. This thing's going higher. That is the bottom of the list. It is indeed. My bear market survival guide, Khan is touting that. I'm sure you've all already downloaded it, but it is in the chat window there. You can download it now if you haven't. Certainly relevant under current market conditions. Now we're going to head over to the streamers and let's see what you guys and girls have. Tesh has CXL, which is looking a bit sketchy. Unfortunately, Tesh, we can see short-term downtrend, long-term downtrend. Okay. Candles almost, they are predominantly black. I was going to say almost unanimously black, but they're predominantly black. We're seeing a little bit of demand come in here. We are at a potential demand area, or an area of demand. We've seen it in the past. So we could see that demand come back in. I can go hold on the basis that historically, yes, there's been some demand here. Is it a buy? No, this is not something I would buy. Now, I'm happy to concede that tomorrow, a bit Liontown style, we might have this almighty white candle up here as they announce the most amazing thing that they've been working on, or the fact that some other lithium major is going to buy them, that is possible, okay? But I don't think it's probable. And because I trade on what is most probable, not what is possible, I can't buy it here. But I can see reasons to hold it. Certainly I can get to a hold, okay? But I'd be concerned, I'd be watching out for those black candles again, because then I would do what I should have done already. Let's face it. What I should have done ages ago that you might not have done, Tesh, is get the hell out of this one. Okay, but I can go hold for now. From Huzel, SNS, which is ultra short NASDAQ. no, I think that's going down, which I think that means the Nasdaq is going up, isn't it? So I can't really comment on that. It doesn't make sense to me to comment on that. I would have to comment on this, which looks okay, not great. So I don't know, make of that what you will. Looks okay, not great. I think it would look really good though if it got above 12,270. I think it would look great. If it got below 10,982, then I think it's in real trouble. Nice little rally on the Russell last couple of nights. Oozle. Nice little gap there. Wouldn't call it a gap and run, but a little gap. And a pretty good demand candle here. But the overall trends are down. No, I'm not predicting that we are at the end of all of these bearish times we're in. I'm not predicting that at all. But I'm also saying, hey, hashtag banking crisis. Hashtag banking crisis. Yet, we did not make a new low. We didn't make a new low. I know NASDAQ had plenty to benefit, right? But we didn't make a new low on the Russell. Not far away from it, though. We didn't make a new low on the S&P 500. Certainly didn't make a new low on the Dow Jones. Hashtag banking crisis. Apparently, credit crunch. And yet we haven't made new lows. Oh, I think that's interesting. Okay, do I have time for Nanosonics? I don't have time for Nanosonics. For you, Pookly Woo. But because I love your handle, Pookly Woo, I'm going to do it anyway. I think it's a hold. It's not a buy, but it's not a sell either, okay? It's about as sideways as you can get. And you must say, Carl, you've looked at it for 3 seconds. What do you know about Nanosonics? I said, I don't need to know anything about Nanosonics. I know enough about it. It's going sideways. If the market is excited about this, they will start to demand it in excess of the supply that's available, and they will start to push it up and start to do this sort of stuff. And then I'll start to get interested. And with the right candles, I could certainly buy it. If it was to break beneath this area down here, I don't think I'd want to continue to hold it. But in the meantime, if you're a true believer in whatever it is they're doing, then continue to believe. That's up to you. For Leonardo, I've looked at Woodside, but I can look at your second one, which is Fortescue. Interesting level, isn't it? Coming back to that long-term uptrend ribbon, which we know should support price. I would say it's gotten here with some pretty ugly candles and price action. Short-term trend clearly to the downside. Let's give it the benefit of the doubt. Let's give it half a dozen more candles. Literally, I think you'll know by then. If you get those black candles, upper shadows in and around 21 to 21.50, I'd be lightening the load, okay? If we stay white candles from here, lower shadows, this is holding and you're probably fine, okay? I think we're on high alert here. Maybe, not maybe, probably there was reason in the price action to exit some before this, to take some profits before this price action, recent price action even occurred. From Angus, can I do PDN? This is a bit of a uranium overview here. Look, again, it looks like lithium, doesn't it? It's hold on the basis that there's a half decent candle there, and it's only half decent, and I can't buy it. And there is some demand in and around this area though. But again, it's only giving me reason to hold. The probability is still we have some problems here. We just continue to have more supply than demand. There's not enough faith in Paladin to stimulate that excess demand. And is uranium ever going to go? Is it ever going to happen? I don't know. I don't think so. Maybe it's at that point when we all give up that they finally go, there's nothing there. And I could be wrong. Again, huge white candle tomorrow for all I know. But I would suggest to you, and you felt it, you're already feeling it, Angus. I mean, you watch these every day. You know how it feels to see something so consistently go down every day. What does it tell you? Has everybody else lost their mind? And are you the only sane one? Or maybe they're the sane one and you've lost your mind. I don't know. DUG looks fine. I'm happy holder here. I could happily add some risk. It's very sketchy, very liquid. But if you're a bit of a sucker for punishment, maybe I could add some risk if it closes, say, back above 90. I'm whizzing through these because I want to get them all done. I've done NorthernStar for Trader. For Neil saying hackers wrecking Excel spreadsheets, possibly. But I got it back. I beat the hackers. Leonardo Lithium is no longer the flavour of the month. It certainly isn't. Neil saying it's all over. Shorters got belted today. Make no mistake, shorters got roast toasted, sliced and diced. And I think that's what makes this so interesting. The sector was so heavily shorted. What we need to see now is whether there's enough demand left over. Okay, yes, there's demand in the system because shorts are getting toasted. They're put to the sword. What's left after they've covered back? Is there real demand? Are there fund managers saying, yeah, okay, that tells me now, that bid tells me lithium is cheap and I need to rethink my strategy on lithium. We've had a massive pullback and I think now is the time on a value basis to get back into lithium. And that will turn the sell the rally into buy the dip. This is all I'm saying to you. Wait for the buy the dip and then look at lithium. Or you can be a hero and say, that's the bottom and go now. Shorts have covered back. What's next? That's the question we need to ask from a technical perspective. Oil coming down might be good for the miners, possibly. Lots of chats, healthy chat over there on the YouTube stream, which is wonderful. Always welcome. Piedmont apparently is the one to buy from Neil. He's saying, you know it is. His words, not mine. And Computershare is the last one we'll do today because it's the last request, and I have answered everybody's question, which gives me a warm, fuzzy feeling. Computershare likes it when interest rates go up. We haven't seen interest rates go. In fact, we've seen it tank. And this is lockstep now. This is lockstep with the breakdown in yields for Computershare. So if you've got a view that yields are going to go back up, I don't think they will. I think there's enough uncertainty in the world that yields have probably been capped for now. I'm not saying they're going to come down, but they probably won't go much higher. Maybe we see Computershare stabilize as a result of that. But still, there were so many signs that the trend had changed before this. You've got to be proactive. You can't be a true believer and believe something. You can see here, it's clear as day, the trend changing and failing now. This area going to dynamic resistance, and through here, it's dead meat. And it's just so uninteresting for me going forward. Probably going to expect some supply in there. You can hold and see how the candles go there, but it's not one I want to own personally. No interest at all. Boom and squeak. We've done Aristocrat, but it's back in the in the recording there. And Pookley were confirming that they are a true believer. I can't remember what they're true believing, but good luck to you, Pookley. I hope it turns out for you. Let us adjourn there for today. That was, I felt, a really, really great session. I enjoyed it. I hope you did too. You can come back on Thursday where we do the macro stuff. We'll look at the price of gold. We'll look at the price of lithium, of copper, all those key commodities you need to know about to manage your portfolios locally here in Australia. And then, hey, I suggest that if you like copper, don't buy Sandfire. Go buy ticker code SO on the NYSE, Southern Copper. Come and tune in on Fridays. I've got so few registrations and so few attendees on Fridays. My mind is boggling. It does illustrate, however, that over here in Australia, we are so insulated and insular, and we refuse to look outside our little lunchbox. Hey, go register for that one right now. It's on the website, USA edition on Fridays, 12 p.m. Note the time chain. And it's the same session, isn't it? I answer your questions. So if you're thinking about getting involved in US stocks, ask the questions, get the technicals, get the valuation before you do. Hey, Think Markets, good guys in the Australian broking scene. We've got everything you need to trade over here, whether it's for your self-managed super fund with a low flat rate and CHESS sponsored, or you're trading those big macro markets. So indices, foreign exchange, commodities, crypto, and we are commission free actually on our overseas and local shares. You can trade ASX shares commission free with our CFDs. Award-winning broker, we keep getting nominated for them. We keep winning them because we have the best platforms, and most importantly, we have the best customer service. You can call us and speak to us. You don't have to go chatbot, chat, and hey, there's a problem with my account, and you get rook to C4. Okay, AI's on the fritz. Head to www.thinkmarkets.com/au for details. Apart from that, it's been so much fun chatting with you today. Hopefully you got what you needed and you learned lots in the process. All the best until we catch up again. Bye for now. But before you do, hey, hit the subscribe button and the like button. That's really important as well. And don't forget also that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, consider it carefully or seek the help of a financial professional. You can learn more about Think Markets and our wonderful products by downloading our PDS, a product disclosure statement, from our website. See ya.